Welcome back to Investing Talk podcast. Today we're going to take a look at Intel, a company I think we all know, but their stock performance has been, well, it's been pretty unpredictable lately. We're seeing like hints of a turnaround, but also signs of a continued struggle. So is Intel a stock you want to be holding, or is it best to just steer clear? Let's find out.
It's definitely a complex situation. Intel is currently trading near its 52-week low of 19.86. That's pretty far from its high of 45.41.
Oh, wow.
And the S&P 500 is currently at 5,770.20, which kind of points to some uncertainty in the overall market.
So how does this broader market like uncertainty influence how we should think about Intel? Is it a good time to buy low, or could this be a sign of bigger problems down the road?
That's the big question. A volatile market can create opportunities, but it also makes things riskier. For Intel, we really need to look closely and see if this current price is just a temporary dip or if it points to something more fundamental about the company's future.
Okay, so let's dig into some recent news that's been affecting Intel stock. Back in February, there were rumors about a potential takeover or breakup involving Intel, TSMC, and Broadcom. The stock jumped 16% on that news alone. That was its best day since March 2020.
Yeah, the market definitely liked the idea of a big change. A deal like that could be good for Intel shareholders, especially if it meant splitting the chip design business, which is more profitable, from the manufacturing operations, which have been struggling.
But that excitement died down pretty fast. Why didn't it last?
Well, these huge deals face a ton of obstacles. Regulatory approvals, antitrust issues, and just the massive challenge of splitting up such a large company. And don't forget, Intel got $7.86 billion from the U.S. TPS Act to boost domestic chip manufacturing. Selling off that part of the business could put that funding at risk.
That makes sense. So maybe the initial optimism was a bit premature. But then there was some positive news about Intel's manufacturing. Nvidia and Broadcom are testing chips on Intel's latest manufacturing process.
Right, and that is a good sign. Intel wants to go head-to-head with TSMC in chip manufacturing, and having these partnerships with big companies like Nvidia and Broadcom definitely gives them some credibility.
It's like they're signaling that they're back in the game. But then, just as things start looking up, we hear about their giant chip plant in Ohio being delayed until 2030.
It's true that this delay causes some concern. At first glance, it does look like a setback. But it's important to remember that projects this big often face unexpected problems like supply chain issues or changes in regulations. Intel might be taking a more careful, long-term approach.
So maybe not a red flag, but definitely something to watch. Now let's talk about their financial performance. Their Q4 2024 revenue was $14.26 billion, beating expectations. But they still posted a loss per share. And their forecast for Q1 2025 doesn't look much better.
It's a bit of a mixed bag. The fact they beat revenue estimates suggests there's strong demand for their products, which is a plus. But the continued losses are a concern. It shows that they're having trouble controlling costs and becoming profitable. And that's something that makes investors nervous.
Yeah, these earnings reports can be hard to understand. What's the main message here about Intel's financial health?
Well, I think the takeaway is that Intel is going through a transition. They're investing a lot in new technology and building more manufacturing capacity, and that's affecting their short-term profitability. The question is, will these investments pay off in the long run?
So it's a question of potential versus their current performance. Then there's the technical analysis, which isn't looking too great either. Intel is trading below both its 50-day and 200-day moving averages.
That's right. Those moving averages give us some insights into market sentiment and how the price might trend. When a stock is trading below these averages, it suggests there's more selling pressure than buying pressure, and that's often seen as a negative signal.
So should we see this as a clear sign to sell?
Not necessarily. You have to look at technical analysis in the bigger picture. You need to consider fundamentals, industry trends, and how the overall market is doing. Technical indicators can give us clues, but they don't guarantee what the price will do in the future.
Okay, so it's more like a guide than a prediction. Now let's talk about the topic that's on everyone's mind, AI. It seems like every tech company is jumping on the AI bandwagon, and Intel is no different. They're creating new AI processors, promoting AI-powered PCs that even want to ship 100 million AI PCs by the end of the year.
Oh yeah, they are definitely going all in on AI. They see that AI is becoming important in all sorts of industries.
Right.
It's changing everything from cloud computing to self-driving cars, and Intel's betting big on its potential.
But with companies like AMD and Nvidia already so strong in AI, can Intel actually become a leader in this area? Or are they just trying to catch up?
That's the question. Intel has the resources and the technical know-how to make a real impact, but they're up against some tough competition, especially from Nvidia, who are already a big deal in data centers and gaming.
Yeah, it's going to be fascinating to see how that competition unfolds. And then we have Intel's big win with the CHPS Act. They got $7.86 billion to support chip manufacturing in the U.S.
That funding is a huge boost for Intel. The CHPS Act is all about reviving the U.S. semiconductor industry.
Right.
They want to reduce our dependence on foreign manufacturers, and that's really important in the current geopolitical situation.
So it seems like this is a big win for Intel. Is this enough to give them the edge they need?
It's definitely a step in the right direction, but remember, the semiconductor industry requires a lot of capital. It takes huge investments to build and equip those advanced manufacturing facilities, and the competition is fierce.
So a positive development, but not a guaranteed win. Finally, let's talk about leadership. Pat Gelsinger stepped down as CEO at the end of 2024, and there are currently 2 interim co-CEOs running Intel.
Yeah, leadership changes can definitely have a big impact on a company's direction. It'll be interesting to see how this new team handles the challenges and opportunities ahead for Intel and what kind of path they set for the company.
It feels like they're hitting the reset button. So with all of this in mind, is Intel a stock worth considering?
Intel is at a crossroads. They're facing some serious challenges, but they're also making moves that could set them up for growth in the future. It's a high-risk, high-reward kind of situation.
So what's the most important question that investors should ask themselves about Intel right now?
I think the biggest question is, can Intel actually show real progress in turning things around? Are they gaining ground in areas like AI and data centers? Are they becoming more efficient in manufacturing and getting more profitable? The answers to those questions will determine whether Intel can really bounce back.
So it's a story that's still unfolding. In part 2 of this discussion, we'll dive deeper into the competitive landscape. Look at Intel's plans for new products and analyze their potential for growth in emerging markets. Stick around for more analysis and insights.
Welcome back to Investing Talk podcast. We've been taking a deep look at Intel's current situation, and it's a company with a lot going on right now.
We've talked about their ambitions, their push to get back on top in manufacturing, and their efforts to break into new markets like AI. But to really get a handle on Intel's prospects, we need to zoom in on the competition.
Absolutely. The semiconductor industry is incredibly cutthroat. Intel's up against some really tough opponents. In the data center market, AMD's been giving Intel a run for its money, steadily grabbing market share with its EPYC server processors.
AMD's chips have a reputation for being powerful and energy efficient.
Huh.
How worried should Intel be about this challenge to their dominance?
It's a serious challenge. Intel needs to keep innovating and come up with products that stand out if they want to hold on to their spot in the data center market. And then you have the gaming market where Nvidia's been practically untouchable.
NVIDIA's GeForce GPUs are a huge hit with gamers. Their data center GPUs power some of the world's most powerful supercomputers. Can Intel's Arc Alchemist GPUs really compete at that level?
It's an uphill battle for Intel. NVIDIA's got a strong brand, a loyal following, and a history of delivering high-performance GPUs. Intel has to show that their Arc GPUs can perform just as well and have the features gamers want.
It sounds like Intel's facing some stiff competition in these key markets. And then there's TSMC, the global foundry powerhouse. How does Intel's plan to be a big player in the foundry market stack up against a competitor that size?
Taiwan's semiconductor manufacturing company is a giant. They're the world's biggest contract chip manufacturer. They make chips for so many companies. Apple, Qualcomm, even AMD. Intel's goal of becoming a major player in foundries puts them head-to-head with TSMC, and TSMC has a massive head start when it comes to scale, technology, and relationships with customers.
So Intel's facing challenges on multiple fronts. What's their plan for tackling these challenges and staying competitive in an industry that's changing so fast?
Intel's strategy is built on a few main pillars. First, they're pouring money into their manufacturing capabilities. They've announced plans for new factories in the US and Europe. The aim is to get back to being the leader in technology and to rely less on outside foundries.
It sounds like that CHPS Act funding is really helping them make those investments. But looking beyond manufacturing, what else is part of Intel's strategic plan?
They're also really focused on areas with high growth potential like AI, cloud computing, and edge computing. They're developing processors and software specifically for those markets, hoping to ride the wave of increasing demand for high-performance computing.
So they're trying to position themselves as the go-to company for all things computing. What about their product roadmap? What can we learn about Intel's future direction from the products they have in the pipeline?
Their product roadmap definitely shows how much they're emphasizing AI, high-performance computing, and getting into new markets. They're still working on their Xeon scalable processors for data centers, trying to take back the performance lead from AMD. They're also putting a lot of effort into AI with new processors, software, and platforms built to handle heavy AI workloads.
It sounds like they're covering all the bases. What about their GPU goals? Are they still putting resources into that area, even with all that competition?
They are. They haven't given up on those Arc Alchemist GPUs. They're working to make them a real option for gamers who are looking for an alternative to Nvidia. They're also exploring new GPU architectures and software technologies to boost performance.
So they're in it to win it in the GPU market. But it's not all about the products and tech, is it? What about Intel's leadership and the culture at the company? Can they create an environment that encourages innovation and the flexibility needed to succeed in such a dynamic industry?
That's a crucial element. The new leadership team has a big job ahead of them. They've got to energize their employees, attract the best talent, and build a culture that embraces taking risks and thinking outside the box.
It's about creating a winning mindset. And in today's world, companies need to show they're serious about sustainability too. How is Intel handling that growing concern among investors and consumers?
Sustainability is becoming more and more important for any company, and Intel's taking it seriously. They've set ambitious targets for lowering their carbon footprint, and they're actively promoting diversity and inclusion. They're making progress, but they need to stay transparent and do a good job of communicating what they're doing to those who have a stake in the company.
Transparency and action are key.
Yeah.
So we've covered a lot. Competition, Intel strategy, their product roadmap, leadership culture, and sustainability. It's a pretty complex picture.
Absolutely. Intel's at a turning point. The choices they make now will have a big impact on what happens to them in the future.
Welcome back to Investing Talk Podcast. We've spent the last two segments really digging into Intel's place in the tech world, and it's pretty clear they are at a crucial moment.
We've looked at their strategies, their push to become a leader again in manufacturing, and their move into new, fast-growing markets like AI. But the bottom line for investors is always, is Intel a stock worth buying right now?
Let's get right to it. What are the things that could make Intel's stock price go up?
There are a few things that could really give Intel stock a boost. The most important one is if they actually succeed in their turnaround plan. If they can show they're making real progress in winning back market share in key areas like data centers, and AI investors will probably react positively, and we could see those share prices climb.
So it's about showing results, not just talking about them. What else could help Intel stock move in a positive direction?
If the PC market makes a comeback, that would be huge for Intel. The PC market has been kind of flat in recent years, but there are signs it might be picking up again. Things like people working from home and the demand for gaming PCs are driving that. Intel still has a really strong position in the PC processor market, so any increase in PC sales would be good for their bottom line.
It's interesting how all these different parts of the tech industry are connected. Are there any other potential catalysts investors should have on their radar?
If they make some big breakthroughs in their manufacturing technology that could give them a real edge over their rivals, they're investing a lot in advanced packaging and new transistor designs. If those investments pay off and lead to big improvements in performance and power efficiency, it could be a game changer for Intel.
Sounds like there are a number of things that could potentially push Intel's stock up. But let's flip the coin. What are the risks that could make Intel's stock price drop?
Well, there are always risks. If Intel keeps reporting losses and their financial performance is weak, it'll likely make investors lose confidence. They have to show a clear plan for becoming profitable. That will reassure the market that their turnaround strategy is actually working.
Profitability is crucial for any company, especially in a competitive industry like tech. What other risks should investors be aware of?
The competitive landscape is always changing, and if competition gets even tougher, it could take away more of Intel's market share and profits. Companies like AMD and Nvidia are constantly pushing for innovation. Intel has to stay ahead of the game to remain competitive.
It's a never-ending race to innovate in this industry. Any other potential risks that could impact Intel's future?
There are always geopolitical risks and potential supply chain problems. That's always a concern, especially in an industry like semiconductors, which is so globalized. Any disruptions in the supply chain could have serious consequences for Intel and the whole industry.
It's a good reminder that even the biggest companies aren't immune to what's happening in the world. So, Intel is a classic risk-reward situation for investors. There's potential for growth, but also some real risks to think about. How should investors approach this?
The decision to invest in Intel or any stock really comes down to each individual's risk tolerance. How much risk they're comfortable with their investment timeline and their overall investment strategy. There's no right answer for everyone.
So investors need to carefully consider their own situation and what they're hoping to achieve with their investments. What advice would you give to someone who's thinking about investing in Intel?
For investors who are okay with more risk and are thinking long-term, Intel could be a good opportunity. It's a well-established company with a strong brand, a global presence, and a track record of innovation. If their turnaround plan works out, the potential rewards could be big.
It's a bet on Intel's ability to overcome the obstacles they're facing. What about investors who are more cautious about risk?
If you're an investor who doesn't like a lot of risk, or you're looking for a quicker return, it might be better to wait until there are clearer signs that Intel is making a real and lasting comeback before putting your money in.
It's all about striking the right balance between risk and potential reward. So, after looking at where Intel stands right now, their strategy, and the competitive landscape, what's your overall take on Intel as an investment?
Intel is a company that's going through a transformation. They're up against some tough challenges, but they are taking big swings to set themselves up for success in the future. Whether those efforts will ultimately succeed, we'll have to keep watching.
Intel's story is still being written. We've taken a look at Intel's past, present, and potential future in this episode of Investing Talk podcast. We've covered their financials, their plans, the competition they face, and the risks and rewards of investing in this major player in the tech world.
I hope our conversation has given you some useful insights and different perspectives to help you make smart investment decisions.
And remember, investing in the stock market always has risks. It's important to do your own research thinking about talking to a financial advisor and invest wisely. Thanks for joining us on Investing Talk podcast.
We appreciate you tuning in.
Don't forget to like, subscribe, and leave us a comment below. We love hearing your feedback, and we want to know what you think about Intel's future. Until next time, happy investing.